So when you hear the name Pfizer, what's the first thing that pops into your head? The COVID vaccine, right? Or maybe you think of it as just a sleepy, old-school pharma stock that pays a decent dividend. Well, you know what? Both of those views kind of miss the real story. Today, we're going to deconstruct Pfizer like a senior Wall Street strategist would, and what you'll see is a company in a really fascinating high-stakes transition. Okay, let's dive in. See, on the surface, the market sees one of two things: the pandemic hero or just a boring dividend play. But the balance sheet, well, that tells a much more interesting story. The truth is, Pfizer today is a complex transition stock. It's a company trying to navigate this massive challenge while building its next chapter. And that conflict? It's right at the heart of the entire debate about whether to invest in them or not. And here is that challenge put into a single massive number. By the end of this decade, Pfizer is looking at about $17 billion of its current revenue getting hit by expiring patents. In the industry, they call this the patent cliff. And trust me, it is a serious headwind that the company absolutely has to figure out how to overcome. But this is a huge but. Don't let that cliff scare you off just yet. Because while that $17 billion hole is very real, so is this number. Pfizer's 2025 revenue engine is still projected to churn out over $62 billion. The company is still an absolute cash-generating powerhouse. So the real question is, how do you value a business that has a ticking clock on some of its biggest assets, but still has this massive engine running? To do that, we have to break it down into layers. So let's start with layer one, which we're going to call the toll bridge. Think of this as the foundation of Pfizer's current profitability. It's the part of the business that's funding everything else. So what exactly is this toll bridge? Well, think of Pfizer's blockbuster drugs, the ones with ironclad patent protection, as toll bridges. For a limited time, they generate these enormous, high-margin cash flows, almost like an annuity payment you can count on. But eventually, that patent exclusivity ends and the toll bridge basically becomes a free public road. The whole game is to collect as much cash as you possibly can before that happens. And these right here are the specific pillars holding that bridge up. We're talking about absolute giants, like the blood thinner Eliquis at $8 billion, the Prevnar vaccine family at $6.5 billion, and the Viaginkill family at $6.4 billion. These three franchises alone are the cash cows that give Pfizer the capital it needs to go out and build its future. All right, let's move on to layer two and see how this all connects. We call this the operating system. And this isn't about any one drug. It's about the incredible machine that Pfizer has built to turn a scientific discovery into a global blockbuster. You see, Pfizer's real value is built on this core economic loop. It's like a flywheel. They invest in R&D and business development, they build or buy new assets, they use their massive global scale to sell them everywhere, they harvest all that cash, and then they recycle that capital right back to the beginning of the process. The value isn't just in finding one magic bullet. It's in the fact that this powerful flywheel is repeatable over and over again. And a perfect example of this operating system in action is the recent massive acquisition of Seagen. Now, this wasn't just about buying a few drugs. It was a huge strategic decision to point the entire Pfizer flywheel at a new target. With this one move, the super high growth field of oncology is now the company's new center of gravity. And that brings us to the final layer, layer three. The premium platform. Now, this is where we shift from thinking about today's profits to the potential for tomorrow's growth. This is the part of the business that really represents the future. This premium platform is made up of what Wall Street calls options. You can just think of them as bets on the future that aren't really reflected in today's stock price. For Pfizer, the biggest ones are the future growth from that Seagen oncology portfolio, the massive potential if their new obesity drugs hit big, and just the general value of their entire drug development pipeline. And this, of course, leads to the billion-dollar question. I mean, it's one thing to say there is potential, but how do you actually put a price on an option? How much is that future growth really worth today? Answering that question takes us right into the heart of the whole valuation debate. So let's get into the real debate buzzing around Pfizer's stock. Is it cheap for a very good reason? That scary patent cliff? Or is this a genuine opportunity to buy into a powerhouse franchise at a discount? This slide right here explains exactly why Wall Street is so divided. If you look at Pfizer's official by-the-book GAAP price-to-earnings ratio, it looks kind of expensive at around 20 times earnings. But if you look at the adjusted PE, which strips out certain one-time costs like that massive Seagen acquisition, it looks incredibly cheap at just 8.5 times. This disconnect is the entire reason for the argument. So, you can essentially map out three possible futures here. The bear case says the patent cliff damage is going to be severe and the pipeline just won't deliver. The base case assumes Pfizer kind of manages the transition and oncology helps offset the big losses. And the bull case? Well, that one argues the market is panicking way too much about the patent cycle and that the future growth from Seagen and maybe obesity is being massively undervalued. So after breaking down the toll bridge, the operating system, and the premium platform, it really all comes down to one final critical question. This is the question that every single investor has to answer for themselves. Can Pfizer's powerful operating system build new toll bridges from its platform of options fast enough to replace the old ones that are expiring? And can it do all of that before the market just gives up and decides the transition is too messy and takes too long? The answer to that question is what will determine whether Pfizer is a value trap or one of the great value opportunities in healthcare today.